All right, let's jump right in. Today, we're looking at a high-stakes economic standoff between two global giants, India and the United States. We're going to get behind the headlines and figure out what's really driving this multi-billion-dollar dispute.
So just how big of a deal is this? Well, let's put a number on it. Over $85 billion. That's the value of Indian exports caught right in the crossfire of this whole conflict. And that's a number that affects a ton of businesses and, a lot of jobs.
And that really brings us to the main question here. With so much money on the line, why can't these two countries just figure it out? What is actually causing this massive deadlock? To get to the bottom of that, we got to start at the beginning. We're going to look at the timeline of this whole thing and the core disagreements. It's a story that actually kicked off with pretty high hopes, but soured really, really quickly. So, here's the thing. Formal trade talks kicked off way back in February of 2025, but they've pretty much gone nowhere. I mean, despite all the discussions, no agreement has been made, which has led to the stalemate we're seeing today. So why did the talks just completely fall apart? Well, the heart of the problem goes beyond just money and into geopolitics. Let's break down the oil and tariff dispute that's really at the center of all this. What's really striking is just how fast this all escalated. In February 2025, they're talking. Just 6 months later, boom, by August, the US drops a bombshell, a 50% tariff on a huge range of Indian goods. The situation went from negotiation to basically an economic war with incredible speed. And the official reason the US gave for these huge tariffs? It was India's decision to keep buying oil from Russia. From the American point of view, this was undermining international sanctions and all the economic pressure being put on Russia. And just like that, a trade issue turned into a major geopolitical flashpoint. But like with a lot of these international disputes, there are two very different sides to the story. The US is basically saying the delays are happening because India's top leadership isn't really engaging. India, on the other hand, says that's not true at all, pointing to multiple high-level calls and saying they are on the verge of an agreement several times. It's a perfect example of just how disconnected the two sides are. Now, these high-level fights aren't just happening in fancy government buildings. They have very real consequences. So let's take a look at the specific industries that are feeling the pressure and the real-world impact of this deadlock. This chart gives us a really clear breakdown. We're seeing huge hits to India's textiles, gems and jewelry, seafood, and chemical industries. And you see that big slice for other MSMEs? That's micro, small, and medium enterprises. We're talking about thousands of smaller businesses that are now just struggling to stay afloat.
Yeah, so the tariffs are strategically aimed at these labor-intensive sectors, the very backbone of Indian manufacturing and jobs. But, and this is really important, notice the exemptions. Pharmaceuticals and semiconductors are not being targeted. That seems like a pretty strategic move to make sure global supply chains for those critical items stay stable.
And the impact has been, devastating. This chart shows the dramatic drop in market share for Indian goods in the US. In some of these key sectors, Indian exporters have lost anywhere from 25% to a staggering 70% of their US market since the tariffs hit. And if you zoom out, the effect on India's entire economy is significant. Experts think this whole dispute could shave between 0.3 and 0.5% off India's total GDP. Now, that might not sound like a huge percentage, but for a national economy, that is a massive hit.
So, with all these economic impacts, the dispute has really evolved. It's not just about tariffs anymore. It's about strategic moves on a new global chessboard. Let's explore how both countries are now trying to maneuver for an advantage.
Both sides are definitely making some strategic pivots. The US is using these tariffs as leverage, trying to pressure India into lowering its own tariffs on American agriculture and energy exports. But India isn't just sitting back. It's actively looking for new markets, mostly in the UK and the European Union, to try and depend less on the US. But the thing is, this whole situation could get much, much worse. Take a look at this number, 500%. What could that possibly be? Well, that number is tied to a bill being proposed in the US Congress, and it threatens a crippling 500% tariff on countries that keep buying Russian oil. If that were to pass, it would cause an almost unimaginable disruption to Indian exports and the entire global trade system. And that leaves us with a final crucial question. As the US uses its market for leverage and India diversifies its trade partners, there's this really complex power dynamic playing out. In this high-stakes game of economic chess,
Who do you think really holds the ultimate leverage?